as we discussed in the Daily Financial this morning, a international court has ruled Trump's tariffs are unconstitutional. That has undoubtedly set up a process of appeal and ultimately something happening in the Supreme Court is my guess. But heck, we don't want to wait weeks and maybe months for this. I want to know what's happening with interest rates, with mortgage rates, because again, if you read the press clippings, tariffs are no more. They're gone, and everything has gone back to normal. We're going to talk with Convoy Home Loans and see if rates are moving lower, perhaps, or higher. What's what, guys? What's going on?
Not too much, but it's never a dull moment in the market and the mortgage industry. And obviously, the last 2 months have been a lot of talk, and a lot of rate movements have been predicated on the tariffs that Trump's been trying to impose. And yesterday, and it wasn't. Let's just say this: the market, Wall Street. What did they call it during his interview that he wasn't too stoked about?
Are you talking about the taco trade?
Yeah. Trump always chickens out, right?
Yeah. Ouch.
He wasn't too happy, but ultimately, like, I can confidently say that over the last 2 weeks, we were heading towards a little bit more certainty with where tariffs were going to land. Now we're taking a step back in terms of the bucket of being in a more uncertain period for Wall Street traders, right? Which uncertainty is going to bring a little bit more volatility, is going to keep rates here a little bit higher for longer, right? Because of that. Now, I don't think this is the end. It's not the end. Trump's obviously going to appeal. It's going to probably go to Supreme Court, like you said, and we'll see how that shakes out. But that's something big that, in the last, not just 2 months, 2 years, 4 years, there's always going to be a let's just say topic that's driving the markets the most, right? This has been the one that's been driving the markets the most, and this is only going to keep it higher for longer, which we've said for long now.
Yeah, there's breaking news actually on CNBC, just hit my phone. Trump could ask the Supreme Court to halt tariff block as soon as Friday, which we're recording this on Thursday. So as soon as tomorrow, the Supreme Court might be asked to weigh in. I talked to an attorney a couple hours ago. This is going to be a mess. But why is it important? I think there's a couple of things, and you brought this up. We were on a path where uncertainty was getting better day after day after day, right? We saw the UK win. We saw the China pause. We saw all of these things. And now with this ruling and ultimately battle coming, I'm going to tell you, I think the world's more uncertain today than yesterday. And I don't think I would have said that. I thought we were on a trend for better days. I thought we were on a trend to get past all of this chaos by July 20th, which is the 6-month mark of his second term. And I thought things were going to get better, but that's not the case. I think things just got markedly worse and going to frankly get really, really messy. And from where I sit, that doesn't generally bode well for interest rates. Now, I know the 10-year note is down today in a snapback reaction, but as things get messy, historically rates go up, not down. Is that right, Jonathan?
Yeah, absolutely. And I mean, it's down, but it's still up, right? We're not talking even about that much down. And people, I think, are very, very sensitive to the movements of the treasuries, right? But if you look at it if you zoom out from even call it a 5-day or a 1-month scale, you'll see that it's not really that much of a move. Which in the interim, obviously rates we're seeing, like yesterday, we got on the conventional side, we got a little bit of worsening and then got a little bit of improvement and then got a little bit of worsening. I think we'll probably see that continue for, forever, for as long as, everything stays uncertain.
Yeah. Again, what the rate market needs is certainty. And obviously we've been in an uncertain market since February 2nd, Liberation Day. And April 2nd. I don't remember. Well, yeah, April 2nd. Sorry, April 2nd. And it's not getting better today. It's only going to get worse. Now we can hope for clarity in a couple of days, if not a couple of weeks. But this is tough. Rates are going to be higher. Spreads are going to be higher. Businesses are going. Can you imagine being a business who has to import stuff from overseas? It's on. It's off. It's on. It's off. I pay. I don't pay. Oh my God! Rip my hair out. So this is going to have ramifications in the economy, and all we can hope for is more certainty, not less. And I think we took a big step backwards in the last 24 hours. But guys, let's do a little bit of education in the space that you guys play. Obviously, one of the things you do is pull credit. It's how you verify that a borrower is a good candidate or not. But there's this lingo in the space that I don't think a lot of people understand. That is a soft versus hard pull. Help us understand what those are, why they're important, and why they're different.
Yeah. So, and also, I want to take one step back, if you don't mind,
Sure.
where, a lot of the loans that we do are business purpose. So they're DSCR loans where we're ultimately using, the property's income to qualify, not the individual, right?
Sure.
But we get asked a lot on initial calls, like, do you have to pull my credit? I thought you don't need to pull my credit. Well, I'm going to start with that in that this is still a product that you need to have your personal credit pulled, because even though we're only looking at the property's income for income qualification purposes and not your personal income, we still need to know the operator behind the business, which is you, right?
Yep.
And your
Yep.
ability to make payments on time with other creditors that you already have an agreement with, which will ultimately still help or hurt how good or how bad of a rate that you get based on the risk level that we see with your other payments, right? So there's a lot of
Exactly.
times that we have to explain that. And I wanted to make sure everybody that probably most of you do know that you need to have your credit pulled on a DSCR loan. And I'll let
Yeah, I
John
think.
go on to
Yeah, I
soft
think
and hard. Sorry.
yeah, it's all right. I think that's really important. It's really weird that people maybe hear balance sheet loan or DSCR loan and feel they can escape bad credit. No, you need that because that is a historical reference of how you pay other lenders. And to your point, it doesn't mean you can't get a loan. It's just going to be the risk premium that throws on top of that. So I like that. All right, Jonathan, tell us soft, hard. What is it? Why is it important? What's going on?
Yeah. So a soft pull is basically what creditors and credit card companies, when people get mail saying you're pre-approved for this, pre-approved for that, it's what they do to pull to see where your credit's at, and you don't even know they were in there, right? So a
Mm.
soft pull gives us on the lender side, actually, when we pull, a full story of where you're at, what your score is, how your payment history is, and we get that full picture on a soft pull, but it doesn't show up on your credit inquiry as a hit.
Mm.
Now, on a hard pull, that's the stuff that lender and car companies and auto companies and credit card companies do after you say, okay, I want to move forward on this, right? I want to apply for this. Then they'll do a hard pull to submit it to the actual lenders and underwriters to make sure they can get your file approved, right? So that's the difference between a hard pull and a soft pull. Hard pull lives on your credit report, shows up, it dings your credit. That's the thing that people hate the most. It makes your everyone's supposed 800 900 credit score down to 750, and they blame it always on credit report dings. So that's why hard pulls happen, and then soft pulls are, again, you don't see it on there, doesn't exist. Unfortunately, it's become a little bit of a bad rap because we've had some telemarketing phone companies that to tell clients that they'll do a soft pull, but then unfortunately when they get the credit information, they do a hard pull, right? So there's certain companies that do that. Unfortunately, they've given a bad rap to the rest of the industry in terms of when you tell clients, hey, this is actually going to be a soft pull, they don't actually believe you, right?
Mm.
Um, and the biggest reason for why the soft pull versus hard pull is very important, especially in the DSCR space and non-conventional space for us in particular, is we have, like, if the client is very sensitive with credit, right, and doesn't want all the dings, doesn't want all the stuff that follows with a ding, we have access to products that'll fund on soft pulls,
Mm.
right? So you could, because these loans don't show up on your credit typically anyways, your personal credit, we're able to fund it on a soft pull and then put it onto the business credit, right?
Mm.
So that allows for a little bit more of a seamless process for any client applying, because it allows them to not have to worry about the ding and the effects of that, especially if you're buying, right? This goes heavily for a lot of clients that want to buy multiple properties within periods of time, because that saves your credit from being destroyed by 7 to 10 different inquiries, and just have no inquiries whatsoever living on your credit report, but still be able to achieve what you want, which is build the portfolio up.
Yeah, I love that. And this is why working with Convoy Home Loans is important, because you guys have these conversations with folks, really kind of understand what their plan is, their acquisition strategy, and figure out what product is right for them. To that end, you guys have brought to bear over the last several weeks some products that have 6 handles on them. I'm curious with what's going on with tariffs and all these other things. Are those products still around, or are they all bye-bye?
No, those products are still around. Now actually the floor of rates have kind of increased a little bit to 6.125 just because of the market uncertainty.
Sure.
I think that 5875 is gone forever? No, I don't think so, because we've seen it go away before and come back. But we can go as low as 6.125. What's actually been super popular for clients as well, if they want to go a slightly higher loan to value, have a good cash flow, they're okay putting it in their personal name, is we have a new where we've had this ARM product where if you're a 3 or a 5-year ARM, right, you can be in the low sixes without buying it down up front, but it'll be qualified off of 2% above that starting rate. So right now on a 3-year or a 5-year ARM, in your personal name, again, this one does show up on your personal credit report. It's a little more specific, but if you only care about the rates that you're getting on the DSCR loan, this is a product that'll allow you to get the lowest rates without having to buy it down heavily. But if you don't want to do that right now, like for the experienced investor, over 1.2 DSCR ratio, meaning again, $1,200 payment or rent, and then you have $1,000 payment. That 1,200 divided by 1,000 is 1.2. That still allows you to get mid low sixes without buying it down on a 30-year fixed in the LLC, right? Within with the Wall Street Fund, and that'll allow you to still get that product. This is more so for people that are wanting to get even lower than that, or are more sensitive on the cost perspective.
I like that. Again, not a big fan of ARMs, as you guys know, but I think it's really clear that ARMs are becoming more popular. A couple of years ago, they were 2% of the market. I just saw a mortgage summary that they're now 10% of the market, which, as a guy who is anti-ARMs, is upset about. But there's no doubt there's some people, some situations where ARMs certainly make sense. Dustin, what do you think about all of this? Nonsense tariffs, ARMs rising. What are your kind of closing thoughts?
Closing thoughts is the same thing we've said probably 20 times over the last 3 months. Is what's nice is, I'll take that back, is yes, we're going to see rates higher and stay here for longer, but there's nothing really on the horizon that's going to either throw whatever investment that you've been eyeing, and I'm talking about, crunching the numbers on a property you're looking at, and make it either significantly worse or significantly better on the next 3-6 months. There's no event that we're looking forward to that you can gamble on saying this is when rates are going to come down or this is when rates are going to spike. We're going to have a pretty narrow trading range, up or down an eighth to a quarter point for the next 3-6 months is my firm belief. So if you've been waiting on the sidelines and just waiting for that time for rates to drop or go up, stop it, find the property, do the extra homework, and let's get something done.
Yep. Write the district circle offers, follow up, write deals that make sense. I prefer 30-year fixed rate debt. Jonathan, if somebody wanted to get something started, talk soft, talk hard pulls, talk various products, what are they doing?
Go to convoyhomeloans.com and let us know you came from where at.
Folks, there's a little blue box says, I don't know, more info or whatever it is. Click that, drop down one rental at a time. That's important for you because you get to talk to one of these two guys. If you don't do that, you go inside some queue and you don't want to do that. Thanks, guys.
Thank you.
Thank you.